In 2014, two of America's largest retailers went to battle over a single company. Dollar General offered $9.7 billion. Dollar Tree countered with $9.2 billion. The lower bid won. That bidding war set off a chain reaction that would reshape the retail landscape of an entire country and turn two discount stores that most people overlook into a combined $70 billion empire. This is the conflict nobody saw coming, and it's still going on right now. Beat 1-2 different bets. Dollar stores are easy to dismiss. Small stores, limited inventory, fluorescent lighting, products you've never heard of. And if you think that you're making the same mistake that Wall Street made for decades, let's start at the beginning. Because Dollar General and Dollar Tree did not grow up the same way, and that difference is the entire story. Dollar General was founded in 1959 in Scottsville, Kentucky, by James Luther Turner and his son Cal Turner Sr. The original concept was straightforward. Sell everyday essentials at prices low enough that anyone could afford them. Not luxury goods, not fashion, soap, canned food, cleaning supplies, basic clothing. The key insight of Dollar General's model: don't go where the competition is, go where the competition isn't. Dollar General didn't chase suburban shopping malls. It went to small towns, rural communities, places where the nearest Walmart was 45 minutes away, places that major retailers had written off as unprofitable. And in those towns, Dollar General wasn't just a discount store. It was the only store. That positioning gave Dollar General something that money can't buy: captive demand. When you are the only retail option within a 30-mile radius, you don't need to advertise. You don't need a loyalty program. People just come because there is nowhere else to go. Dollar Tree took a completely different approach. Founded in 1986 in Norfolk, Virginia, Dollar Tree built its entire identity around one price: $1. Everything in the store, literally everything, cost exactly $1. That's not just a pricing strategy. It's a psychological trick. When everything costs $1, you stop doing math. You stop comparing prices. You stop asking whether something is a good deal. You just put it in the basket because it's $1. The risk of a bad purchase is almost zero. Dollar Tree targeted suburban strip malls, middle-class shoppers looking for value, seasonal items, party supplies, cleaning products, snacks. The store wasn't a necessity, it was a treasure hunt. You went in for paper plates and came out with seasonal decorations, a picture frame, and 3 snacks you didn't need. 2 completely different models, 2 completely different customers, 2 completely different strategies. And for decades, they mostly stayed out of each other's way. Then a third player entered the picture, and everything changed. Beat 2, the Family Dollar War. Family Dollar was founded in 1959 in Charlotte, North Carolina. It sat in the middle ground between its 2 rivals, more urban than Dollar General, cheaper than Dollar Tree's theatrical $1 concept. It had been growing steadily for decades. By 2014, Family Dollar had over 8,000 stores across the United States. It was the number 3 player in dollar store retail, and its board had decided it was time to sell. What happened next is one of the most aggressive corporate bidding wars in retail history. Dollar Tree moved first. In July 2014, Dollar Tree announced a deal to acquire Family Dollar for approximately $8.5 billion. From Dollar Tree's perspective, the logic was obvious. Family Dollar's urban and suburban locations would complement Dollar Tree's existing store base perfectly. Combined, they would have nearly 14,000 stores, making them the largest dollar store operator in America. Then Dollar General made its move. 1 month after Dollar Tree's announcement, Dollar General came in with a competing bid: $9.7 billion. $500 million more than Dollar Tree's offer. Here's the thing. Family Dollar's board rejected the higher bid. Why? Because Dollar General already had nearly 11,000 stores across the country, many in the same markets as Family Dollar. An acquisition of Family Dollar by Dollar General would have required the sale of hundreds, possibly thousands, of store locations to satisfy antitrust regulators. The deal was bigger in dollar terms, but it was messier in execution. Dollar Tree's bid was cleaner, less overlap, faster close, lower regulatory risk. Family Dollar chose certainty over the higher price tag. Dollar General sued. They claimed Family Dollar's board was breaching its fiduciary duty to shareholders by refusing the higher offer. The lawsuit failed. Dollar Tree completed the acquisition of Family Dollar in July 2015. The final price, approximately $8.5 billion. At that moment, Dollar Tree became the largest dollar store operator in the United States, with over 13,000 locations. Dollar General, which had entered the bidding war to prevent exactly this outcome, was now facing a newly empowered competitor, one that had just doubled in size overnight. The war had officially begun. Halfway through, and this is where the numbers start getting wild. Subscribe to Boardroom Bio for weekly breakdowns of corporate strategy stories like this one. Hit the like button, it helps the channel more than you know. Now let's keep going. Beat 3, the $70 billion machine. Here is what most people miss about this story. It isn't really a story about discount retail. It's a story about two completely different theories of how to win in America. Dollar General's theory, geography is destiny. Find the customer who has no other options and serve them relentlessly. Dollar Tree's theory, psychology is destiny. Find the customer who wants to feel smart about spending money and make every purchase feel like a win. After the Family Dollar acquisition, Dollar Tree was managing two separate brands with two completely different strategies and struggling to make them work together. Dollar Tree's stores ran on the $1 promise. Family Dollar's stores sold products at a range of price points, some as high as $10. Different inventory systems, different store formats, different customer behaviors. The integration was a mess. Family Dollar stores were underperforming. Inventory management was inconsistent. The promise of the acquisition, a seamless combination of two complementary brands, was proving far harder to execute than the boardroom had anticipated. Meanwhile, Dollar General was executing with machine-like precision. As of 2024, Dollar General had reported 31 consecutive years of same-store sales growth. 31 years. Through recessions, through the 2008 financial crisis, through the pandemic, through inflation spikes, sales at existing Dollar General stores grew every single year. How? Because Dollar General's model is almost recession-proof. When the economy is strong, people shop at Dollar General for value. When the economy weakens, people shop at Dollar General because they have to. The weaker the economy, the more powerful Dollar General becomes. By 2023, Dollar General had over 19,000 stores in the United States. 19,000. That's more locations than McDonald's, more than Starbucks, more than Walmart. No retail chain in America has more physical locations. And they were opening new stores at a rate of approximately 3 per day. Dollar Tree, facing pressure from investors and struggling with the Family Dollar integration, made a decision in 2021 that shocked everyone who had ever been inside one of their stores. They raised the price. Everything was no longer $1. The new price point, $1.25. That might sound like a small change, but for a brand that had built its entire identity, its entire psychological contract with customers around the $1 price point, it was a seismic shift. The reaction was divided. Some analysts praised the move as long overdue the $1 price point had been squeezing margins for years as inflation drove up costs. Others argued that Dollar Tree had just surrendered its most powerful competitive advantage, the simplicity of knowing exactly what everything costs before you walk through the door. By 2023, Dollar Tree raised the price, again, $1.50 for some items. The $1 store no longer sold everything for $1. Beat 4, where it stands now. Fast forward to 2025. Here's the current state of the board. Dollar General's market capitalization had reached over $40 billion at its peak. With more than 19,000 stores, a highly loyal rural customer base, and 30+ years of consecutive growth, it remains arguably the most consistent retail success story in modern American history. Dollar Tree is in a more complicated position. In early 2024, the company announced it was exploring strategic alternatives for the Family Dollar brand a decade after paying $8.5 billion to acquire it. The integration had never fully delivered on its promise. In March 2025, Dollar Tree announced it would sell the Family Dollar chain at a fraction of what it had paid for it. An $8.5 billion bet that didn't pay off. Here's the thing. Dollar Tree wasn't wrong to be aggressive. In 2014, letting Dollar General acquire Family Dollar would have been strategically devastating. Blocking that deal was the right instinct. But the execution, integrating two fundamentally different retail models, maintaining the $1 promise while costs rose, managing nearly 30,000 stores across two separate brands, proved to be more than the organization could handle. It's a lesson that shows up in business over and over again. Winning a bidding war is not the same as winning the war. Paying more to block a competitor is only a good strategy if you can execute on what you just bought. Beat 5 the lesson. Here's what the Dollar General versus Dollar Tree story is really about. Two companies, both selling cheap products, both operating in the same country, often in the same towns, sometimes on the same block. But they made fundamentally different bets about what gives a retail brand staying power. Dollar General bet on geography, going where nobody else would go, building infrastructure in communities that everyone else abandoned. Dollar Tree bet on psychology, building a promise so simple and so satisfying that it made people feel good about spending money. Both bets worked for decades until the world changed. The rural communities that Dollar General had ignored everyone to serve started facing deeper economic stress. Critics began arguing that Dollar General wasn't helping those communities. It was extracting from them, driving out local grocery stores, reducing food options, and creating dependency. And Dollar Tree's $1 promise collided headfirst with inflation, an economic force that no price point can survive forever. The war isn't over. Both companies are still fighting for the same customers, the same corners, the same towns. And the next chapter of this war, with Dollar Tree shedding Family Dollar and Dollar General pushing deeper into healthcare and fresh food, is being written right now. That's Boardroom Bio. Subscribe for weekly corporate stories. Drop a comment. Who do you think wins this war? Long-term, Dollar General or Dollar Tree?